Welcome back. Time to focus on some important earnings that came in over the weekend. HDFC Bank reported a steady second quarter, while Kotak Mahindra Bank reported a weak one. Abhishek is joining in to give us a fine print of both the banking names. Abhishek, good morning.
Good morning, Omar. To begin with, HDFC Bank, as you mentioned, it has been a steady quarter. Look at the numbers. Both the NI and PAT has beaten our poll. The net interest margin on total asset declined by 1 basis point quarter on quarter. This is in line with what analysts were expecting. However, fee income grew by 15.5% quarter on quarter, and that surprised positively. Slippages came in below analysts' estimate at 7,800 crore. Analysts were pegging at 8,000 crore. Even sequentially, the slippages have declined. Gross NPA ratio has inched up by only 3 basis points quarter on quarter, and this is despite the fact that the loan growth has been weak for them. So return on asset is the highest in the last 4 quarters, coming in at 1.96%. They have used 700 crore of contingent provisions this time around, so it's now down to 13,800 crore versus 14,500 crore in the previous quarter. Their credit deposit ratio continues to improve, and it is at 5-quarter low and below 100% for the first time in last 5 quarters. With reference to the subsidiary HDB Financial, that AUM growth was around 27% YoY and about 3% sequentially. Coming on to Kotak Mahindra Bank, it was a weak quarter all round. So take a look at deposit growth on a YoY basis at 15.1% is perhaps the lowest that you are seeing in last 7 quarters. Advances growth of 14.7% is the lowest in last 12 quarters, and sequential growth of 2.45% is the lowest in last 13 quarters. So the net interest margin was impacted. It is below 5% at 4.9%, which is the weakest in last 10 quarters. Cost to income ratio is the highest in last 3 quarters, and their operating profit declined. That's the worrying part. It declined for 2nd quarter in a row, and for the 4th time in last 5 quarters, it's seen a decline on a quarter-on-quarter basis. So they had higher provisions this time around, which led to PAT growth of less than 5%, which on a YoY basis, which is the lowest in last 12 quarters. Slippages were very elevated, coming at 1,875 crore. Morgan Stanley were estimating at 1,630 crores. Annualized slippage ratio is the highest in last 9 quarters, coming in at 1.88%. With reference to the PNL, the NI is a beat. However, PAT is below our poll on account of elevated provisions. Back to you.
Watch out for reactions on both of these banking heavyweights. HDFC Bank and Kotak Bank might just determine where the Nifty moves in today's session. Let's also listen into what the management of HDFC Bank had to say in their earnings call regarding the bank's growth rate.
This year, as we run along, you would see that we are growing loans at or slightly below what the market is trying to grow, right? And what is that rate of growth? We don't know, but we know that it is converging towards the deposits, right? So that, and then over the next year, we would be growing at or slightly above that rate of what the market is growing, and then the following year we'll be at our historical range of what we have done.
Let us also now listen in to what the CEO and CFO of Kotak Mahindra Bank had to say about the company's 2nd quarter performance and the RBI embargo on its debt.
This was the first quarter where we saw the full impact of the tech embargo. But despite that, we grew customer deposits by over 16% year on year, and our CASA ratio stabilized at 43.6%. Slowness in the rural aspects of India, and that was reflected in loans made, commercial vehicles, tractors, and of course we've seen some stress in the microfinance industry, as well as some over leveraging of customers, which reflects up in personal loans and credit cards.
It is from the credit card, mainly from the credit card business, which is contributing to the gross NPA increase and the provision increase. So I think that the percentage increase is in line with the industry as well as, but I think you also need to understand, because of the embargo, our credit card book is not growing, right? It has remained stagnant, because we are not able to add the new cards. The increase in the slippage, which you see around 30 to 40% of that increase slippage would be from the credit card.